Okay, so 1/2 of self-employment tax. So we all remember that for self-employed individuals, they have to pay both halves, both employer and employee portion of self-employment tax, and that includes Social Security and Medicare tax. So if you recall, so Social Security is 7.65%, and Medicare tax, this is for each, so the employee portion and the employer portion, not 7.6, what am I doing, 6.2. Medicare tax is 1.45, and then the same for the employer. So add all that up, 7.65, 7.65, add that together, you get 15.3%. So when you are self-employed, you have to pay the 15.3% self-employment tax up to the Social Security wage base. Of course, we've got some limitations on Social Security. And remember, we've got that additional Medicare tax if your income is over $200,000 as well. But don't worry about that right now. When we get to, we have a chapter on payroll taxes, so we talk about it then, but we also talk more about it when we get to chapter 6 on self-employment. For our purposes right now, what we're interested in is the fact that we get a deduction for 1/2 of this. So if we have $100,000 of self-employment income and we're paying 15.3%, you're going to find out that it's actually not this easy a calculation, but for right now, we'll use this calculation. So 15.3%, so $15,300 of self-employment tax. We have to pay that much money in self-employment. That's even before our income tax. It's very painful. But we get a deduction for 1/2. So essentially, we're going to get 7.65% off of this. So $76.50. This is our deduction for 1/2 of self-employment tax. That deduction for the 1/2 of self-employment tax shows up on the Schedule 1. There is a separate form called the Schedule SE that you're going to be working with again in Chapter 6 that calculates this amount. So, I guess they are talking about the additional Medicare tax. So if there is an additional Medicare tax, then that is included as well. These are the threshold amounts. Remember when we talked about in payroll tax, we talked about the additional Medicare tax starting at $200,000. You'll see on this chart, it's actually different depending upon filing status. But employers, when they are withholding it, base it on the $200,000. But depending on your filing status, you may have to pay additional amounts in. Like for married filing separately, it actually starts at $125,000. So if your employer withheld it starting at $200,000, but you're married filing separately and you owe it starting at $125,000, you're going to have to pay it then when you file your tax return, the additional amount, the amount that you're short. Also, if you're married filing jointly, the threshold is actually $250,000. So the employer, it doesn't start until your income reaches $250,000. So if your employer started withholding it when your income reached $200,000, but your total income never exceeded $220,000, then then you're actually going to get, am I saying that right? 250? Yeah, you're actually going to get that amount back because you never reached the $250,000. Okay, so the amounts that the employers withhold are different from the actual threshold amounts for that additional Medicare tax. And remember, the additional Medicare tax is 0.9%. So and this is on amounts above these thresholds. Let's see. Now, but you think about it. If you're being assessed the additional Medicare tax of 0.9%, you're also above the Social Security threshold, so you're no longer going to be paying the 6.2%. So, kind of it more than evens out for you. They talk as well about this net investment income tax, which is another type of Medicare tax. We don't really have to deal with this net investment income tax, but just to know that it's out there. It's for high income individuals. If they have over a certain amount of investment income, they also, in addition, have to pay 3.8% on that additional amount. So that's the deduction for self-employment tax. Questions?